Hey there, everyone. Dave Barlow here with the gang from Sell for 1%. Everybody's out and about doing their holiday shopping. So here we are on Thursday, December 11th, 24 hours beyond Jerome Powell's decision to lower interest rates by a quarter point.
Yeah, the vote was 9-3. It was characterized as a hawkish cut. In other words, they got drugged there kicking and screaming. Basically, there's 12 Fed governors. Now, one Fed governor actually voted for a half a point cut. So he was more dovish, but the other two voted to not cut. And typically those votes are more unanimous, or maybe there's one dissenter. To have three people that are outside the standard of what the Fed decided to do is a little bit unusual. In his news conference, Jerome Powell was talking about maybe one rate cut in 26 and maybe one rate cut in 27, and it would be data dependent. And the concern, and I understand it, the Fed has a dual mandate. They have to watch out for inflation, and they have to make sure that the unemployment doesn't slip. They're worried about inflation being hot, even though it's not where where they want it to be. It's not 2%. It's more like in the threes. And that's just the actual number. Who knows what the real number is? Worrying about inflation means that they want to raise rates to cool down the economy. But at the same time, they're worried about people losing jobs. So they're stuck in the middle right now. But he definitely did not do anything to help mortgage rates yesterday in his news conference. They are going to start buying treasury bonds, he said, and that would be more in the line of quantitative easing. But the markets don't perceive that as they are buying treasury bonds to really drive rates down. They're just buying treasury bonds enough to normalize things and make sure that the books are balanced correctly. So we're still in the same place on mortgage rates, low sixes, maybe high fives. And we seem to just be stuck there right now.
I think I saw where they were talking a little bit about, first of all, we had the same conversation at the tail end of the last Fed meeting where we're not going to change rates, not going to do anything else, blah, blah, blah. And then, here we are lowering a quarter point. But the thing that I saw that was interesting to me, it was either 11 weeks or 18 weeks that we've been less than 6.5%. And the author thought that was unusual.
I'm used to a little bit more volatility than that, especially through the summer months. A lot of times you do see rates tick up a little bit, maybe come back down. But yeah, we've really been stuck in this range. It's pretty much the same rate, which I guess is good because it's not 8% like it was, but it's
The
not.
rates could be going up.
It could be 8 and we're at 6. So we're right stuck in the middle, basically.
Jamie, what are you seeing out there on the buyer side?
Yeah, I would say a balanced market. I'm seeing buyers have options, having time. My clients are getting the house they want. There's good competition still out there, but it's not a rush for time. Now, I have put 2 or 3 into contract here recently that are all closing within 30 days. Things are moving.
That's
Things
good
are moving along.
Jay, on the seller side, what do you see him?
Inventory's down around 5,000 right now. We're just over 5,000. Seeing a lot of sellers take their house off the market as we head into the holiday season. And I'm seeing things surge a little bit. It may be a result of less competition for sellers. But what I've also read is that this is the best December for mortgage applications in the last 3 years. And then in my listings, I see that reflected. But not everyone is selling right now. If you're overpriced, you're going to sit. You can't just ask $10 million and expect that it's going to sell. But the guys that are priced well, I'm having a better December than I did September, October. So it's kind of bizarro world a little bit. And then you have ones that sit 60 days, 70 days, and all of a sudden you get 2-3 offers. I would say it's fairly balanced, but still a slight seller's advantage, about a 2-month supply right now. So we're not quite to a true balanced or buyer's market yet.
Jay, you probably have this number, total number of sold homes this year versus last year.
I have not looked at that here recently.
I think we're just a little short of last year, but we're still going to sell 24, 25, 26,000 houses. And Columbus is growing. people are moving into Columbus. They got to live somewhere. But I do think it's a lot like the 2010, 11, 12 with the foreclosure crisis. Not that we're in a foreclosure crisis, but I see more people staying where they're at because of the 3% interest rate. Rich, you're obviously not seeing as many refinance deals.
They're reluctant to do it because they don't want to give up their rate. And then they'll talk to me sometimes about, I'd like to move, but I want to keep my rate. People are proud of the fact that they have a 2.5 or 3% rate.
I'm proud of my 2.5% rate.
Yeah.
It's a talking point.
And
So
they
when you-
love me for it. They think that I did something so fantastic. But all I did was give them the rate that it was there. Right now it's 6, and then it was 2.5.
Smoke and mirrors, baby.
Jay, Jamie, Rich, open question. You guys going to Christmas parties?
I'm going to a lot of parties. I'm very popular, and I'm actually walking into one right now. So
At
I'm gonna have to.
9:59.
Yep, I love you guys.
Parties starting.
Thanks, Jay.
Bye-bye.
Good to see you.
The party's over.
All right, fellas, I appreciate the conversation. If you have questions about getting a loan, talk to old Rich. Want to buy a house, you can call Jay Marinsky, or if you want to sell one, you can give me a call. All right, guys, thank you very much. It's about time that they sew me into my long johns for the winter. Have a good one, guys.